Welcome to Broker podcast. We're going virtual today. This is brought to you by AIME, Association of Independent Mortgage Experts. I'm your host, JP Hussey of the Hussey Team Mortgage Advisors. And today I got my boy, our guest, Brian Decker of Modern Lending. Now, you're the owner too, right, Brian?
Yeah, I am. Yeah, I am. Absolutely, man.
Okay, cool. And you're producing the whole thing, right?
Yeah, exactly. I've been producing the game for a long time. I mean, over the last year and a half, I've really kind of more managed my book through a couple of my sales managers, but I'm still super daily in the grind. So for sure.
Yeah, no doubt. Yeah, we were talking yesterday, and we were both we're prepping for this podcast, and we're both like running around with our heads cut off, man, just because of the current environment, And things we'll get into in more detail, but I mean, being a broker is the best spot to be, which we'll talk about, but there's a lot of different things going on in our world as well, different systems getting signed up, and you're a newer broker because you've been in it in the past. Like myself, you're less than a year, really. So
yeah, exactly.
Yeah, the amount of volume that you're doing with everything changing, man, it's pretty impressive. How much volume did you do last year? Units and actual volume.
Yeah, so my personal book was right at about 600 units for about 230, 240 total million on it. And then I manage, four other top producing loan officers that are in my branch and running that, and so we did about 1,200 units last year between
Nice.
5 loan officers for, I think, just right at about 400 million. We should do about probably 600 million this year. I know last month, I think we closed about $150 in units between the 5 guys for just under 45 million.
Yeah, so you're running hard, man.
Yeah,
because I mean, you're in Cali. I'm out here on the East Coast, Philly.
Yeah.
So I like to talk units a lot because, I mean, my average unit volume units probably, I don't know, like 300, 350. Yours is high. I mean,
well, mine's not too high. Mine's about 385.
All right, cool.
So not too crazy. I mean, because I'm in like I call it light white collar, blue collar community. I'm kind of in between Orange County and San Diego. The people that can't afford to live in Orange County, or the people that can't afford to live in San Diego, they live in kind of my bedroom community, which is maybe a market of about 500,000 people or so. So.
All right, cool. All right, that puts it into perspective. I like to try and make sure we get put in perspective to everyone because Cali's so big and it's just different everywhere, no doubt.
Oh, for
Now,
sure.
before we get in, because I know you're the king of systems, you're showing that yesterday to us. I want to give everyone an idea of your background because you were a broker before, then you had a stint in retail for a while. Now you're back, and it's totally different. So if you could kind of run us through your history in the mortgage game, going back to 2004, right?
Yeah, exactly. So I was actually, I actually went to school to become a CPA. I was a math nerd that didn't look like a math nerd. It was like, and so when I got out of college, got a job working for a super prestigious accounting firm, and that was my path. I was gonna be a CPA. Graduated from Biola University, graduated top of my class in accounting. And went and signed up, and I saw my salary, and I was like, what, $34,000 a
right?
year? Like, are you kidding me? And then I had my 2 roommates in college at the time. We all got out of college same time. Both of them immediately went into the mortgage because this was in Orange County. It was at the Mecca, right? Beginning of 2004, the Mecca of subprime, second mortgages, the whole 9 yards.
Mm-hmm.
And I was like, dude, I used to tutor these dudes in basic math. Like, what are they doing selling people a loan that they're going to finance their most expensive house? So they would come home and they would be like telling me like, oh yeah, I got this self-employed, this and that. We're just using a letter. And I'm like, well, what do his 1120s look like? What do his 1065s look like? They're like, what are those? I'm like, wait, you guys are selling something. You don't even know what a tax return is? Like, oh my God, this is nuts. And so I was like, no, I'm sticking with this accounting game. Like, I worked really hard. Well, long story short, one of my roommates came home, and he came home 2 months into the mortgage game and paid cash for a brand new Escalade, And I was like, you are 22 years old. How much money did you make last month? He's like, 40 grand. And I was like, okay. I put myself through college selling shoes at Nordstrom's, and I know finance. Like, I'm going to get into this game, And so I got into it, and I told myself, if I'm going to leave a career in being an accountant, working at a prestigious firm, that there's absolutely no way that I'm just treating this like a job. This is a career for me, because my parents, my grandparents, all of them were they looked terribly down on me. Because mind you, I mean, this was back in the heyday of mortgage. Like, you were a used car salesman, you know what I mean? And so, so I got into the game, worked for a broker directly, but it was just kind of a chop shop brokerage, no guidance, no training. Literally, I went and bought the old school Cliff Notes. Like, if you remember, it's like Mortgages for Dummies. They're like yellow and black books.
Yeah.
And I bought one, taught myself it, ran in that game for about 2004 to 2008. And truthfully, I mean, I was just having a good time. I mean, I was making good money, but, maybe 20 loans a month closing myself personally, and did that. And then 2008 happened, and I remember I had like 80 loans in my pipe, and they were all at like IndyMac, New Century, BNC, and done. All of them canceled. And I was just, so all my buddies were all in the mortgage game. They just dried up overnight. And I just told myself, you know what? Like, I ain't gonna quit. Like, there's no way I'm quitting. Like, if all these people are getting out, I was at least somewhat smart and saved some of my money. You know what? Why don't I sit there and, go out and truly get, figure out this game. I know how to do direct mail. I was watching these guys do it. So I literally went, sold my place I was living in, moved into a crappy little place, 1-bedroom spot in San Diego, because obviously my money completely dried up, and put $40,000 on my Amex card doing direct mail. And then pretty much that was in June of 2009. And then by December of 2009, I had all my credit cards maxed out. And December of 2009, it all fell through, and I closed 61 loans that month, myself personally. And obviously that's a pretty.
So there was about a year where you were just rebuilding and just maxing out cards, like you said. So it took about a year. I mean, do you see, not to jump off, but do you see some correlation now with what we're going through back to then? Because I wasn't in it. I got in 2011. So I missed
completely. And here, panic. People, here's what people do. Like, I am narcissist to the extent of, I believe in myself to a level that probably was unrealistic at that time. Like, I had such belief in myself that superseded my abilities, right? Like, you have to be a little bit crazy to really stay in the game and do that. And so for me, I just doubled down, and I just worked the mailer calls and was doing all the quotes myself and just working around the clock. And I just thought to myself, all these dudes are sitting there filing unemployment, just coasting to wait till like loan mods come out or debt settlement comes out. And they were just going to jump. And I'm like, nah, not for me. I'm going to stick to A paper, vanilla deals, low loan to values, run like a margin of 1 to 1.25% margin, and just murder it. And I did that, and did that from pretty much stayed on the broker side. And that was still on the broker side at that time. And then in about 2012, I saw Guaranteed Rate at the time, and I started making the Scotsman guide list. So 2010, I was like biggest volume gain in the country. I think I went from doing 30 million to like 100 million in a year. So I started making those lists pretty regularly. And so I got a call from Guaranteed Rate, and they were like, hey, we want you, and so I was like, I'm kind of a really big fish in a small pond. Do I got what it takes to go up against Joe Cottabiano, Ben Cohen, Sean Benogian, like all these dudes that were doing 200 million at the time, 400 million. It's like 2012. And so I made the jump. So I went to the retail world, not because I was unhappy with the broker world, but I was such a big fish and I wanted to challenge myself. And so then I was over at Guaranteed Rate. And
that was kind of the transition for a lot of people though, right? When you say in that 2011, 2012-ish, because I mean, let's be honest, the broker world, we were kind of the scapegoat, right? For the financial crash.
Yeah.
So you went over to the G Rate, right?
Yeah.
How long were you there for?
I was there for 4 years, man. And it was I'm one of those people, I think there's a place for everybody in this industry. I think there's a place for retail, a place for bank, a place for direct to consumer, and a place for broker. Like I'm not one of those people that like bashes anybody on it, because still to this day, some of my very best friends are the guys I met at Guaranteed Rate, and I owe a lot to them, and especially with my systems, because I was able to put myself in an environment that surrounded myself with the very best producers at the time in the country. I mean, there's a certain level that you have to run at when you're closing 200 million. And so pretty quickly I rose through the ranks there. And then was at GR till 2017. Left in 2017 and, was doing about 250 million a year at that time, and left to go to Loan Depot. And the reason why was I wanted a company that was West Coast based, because in fact, Guaranteed Rate was a fantastic company, but I was heavy VA and heavy FHA because of where I'm at in California.
Right.
And Guaranteed Rate was in Chicago. So, I was doing 10 times the next closest person to me in government loans at that company at the time. So it was tailored more for the conventional originator, jumbo originator, which wasn't me. And so moved over to Loan Depot and went over there and was over there and had the chance to be kind of personally mentored by Anthony Shea, who was the founder of Loan Depot. Still to this day, probably one of the top 2 or 3 most brilliant individuals I've ever met in my life. I mean, you don't realize real IQ and real intelligence and a real sense of a business savage until you put yourself in that room. It's like being a college ball player and you think you're legit, and then you go and you hit batting practice with Alex Rodriguez.
Yeah, you're nothing.
Oh, I didn't know people were like this. And that was what I got from him. And I was over there for 2 years, was the #1 originator at Loan Depot back-to-back years, again, doing 600-700 units for, 250. And that's when I really got the taste of running a branch. Really went after it and went to all my competitors in my market and said, hey, you either come work for me or I'm going to kind of put you out of business. I'm taking your market share. Why don't you come join me rather than fight me, because you're not going to win. And I'm just a friendly competitor. So that's what I did at Loan Depot. I took number 2, 3, 4 guys in my market, had them come work for me, and then left to start Modern Lending with those guys. So now I've been over here on the broker side since June of 2019. Yeah, June of 2019.
All right, so you're going on about a year then.
Yeah, exactly. And so been over here, and all those guys are still with me, and we've about almost tripled in size within a year. And so I love it, man. I love it. I think the systems I've built and the success I've been able to have so quickly in the broker world is a lot to do with what I learned in the retail side, being able to learn how to scale, which is something I think a lot of times brokers come over here, they have a hard time scaling.
Yeah, no doubt.
You don't get that business out of the box.
Yeah. I mean, let's be honest. G-Rate and Loan Depot, they're known for systems, right? So if we kind of transition to that side, right? Mm-hmm. So I mean, you started in the broker world and you were kind of just running, right? Yeah. You're just a salesman for the most part.
100%.
Right?
2 assistants, and that was it. Yeah.
Yeah. So then you hopped over retail side, and that's when I started at Wells Fargo. They had some decent systems, but G-Rate and Loan Depot, they're known for that. So you were in the time when systems became key. Really, you hit that at the right time, the retail side. Yeah. No doubt. So then you jump over here and you took some of those systems, but you created it on your own. I saw some of them yesterday. I mean, it's pretty impressive how you can have, Jungo connecting with Google Docs even, and everything kind of even automated, being highlighted. I mean, it was pretty crazy. Yeah. I don't know if you want to dive into that a little bit of how you run from once you get a lead almost till closing. If you want to run through that in a simplified form, you can do that. That'd be great.
Yeah, 100%. And when I came over to Guaranteed Rate, I'll be honest, the company I was at, which was a broker before that, was a company called City First. Great people, but I mean, I'll be honest, I was arrogant. I was 29 years old, driving a bright green Lamborghini around. It said dirty and under 30 on it. I was the quintessential just douchebag, and and I was living in San Diego in Gaslamp, and I mean, kids when they're, I didn't grow up with any money. So you go from not making much money to all of a sudden cashing $200,000 a month checks. You drink your own Kool-Aid a little too much. So that's why I wanted to go over there. And I went over there and I was just oh man, okay, I was a salesman. These guys are businessmen. It is a difference. I could sell, but I was not an entrepreneur and I was not a businessman. And so I had to cut my teeth over there for about a year. Before I started gaining the respect of the top originators over there. And then after about a year, when they saw that, because the one thing I thought was great about the retail side is they make it they gamify it, right? And to gamify something is super important. So it was leaderboards and rankings and scorecards and this and that. So it created this internal sense of competition, but they gamified it. And because of that, so I was able to get to know, who's still probably one of my best friends this day, is Sean, who's the #1 originator in the country still. I mean, did 1.1 billion last year, #1 on Scott's guy. And I watched this dude, and he, salt of the earth guy. He's 39 years old or 2 years older than me. And we sat down and started like really going through stuff. And I realized like, okay, this is my time. I'm going to become a businessman. I'm not going to be a salesman anymore. I'm going to be a businessman. And businessman, you have to be able to remove yourself from the business and allow it to run. And if you can't do that, you don't have a business. You're a salesman. That's it.
Right.
And so, because I couldn't take vacations, I couldn't do anything. And so what I realized was they embodied something called a pod system over at Guaranteed Rate. And what I did is I understood very quickly that, and it sounds really bad, but human beings and monkeys, like to a certain extent, we operate the best into our highest capacity when we are given 1 or 2 tasks and we become an expert in them, okay? And so what happens is I realized I broke down the true loan process and I said, okay, this is not designed for one loan officer to do that. You have a lead incubation period and a lead follow-up period, and then you have a handoff. It's like running, if you're a sprinter in a relay race, right?
Yeah.
Now, 4 dudes are going to beat 1 dude. Even if that 1 dude is way faster than all 4 of those dudes, that dude is going to lose because he's going to get tired. He's not going to be able to do it. So I broke it down. I said, okay, I'm going to change this system out and run an ISA desk. And this is back in 2012, before even ISA was a thing. So what I did was I broke it down, and I have 2 individual front end. So when a realtor refers a lead over, they don't talk to the loan officer that's going to be doing that loan. That comes in and it talks to you, and I break it down psychologically. Because if you think about it this way, a lead comes over and we racially and personality profile for the benefit of the consumer. Okay, right? I know that if a client comes over and it's a lead and it's a female that's taking that sense of that lead, like it's Jill Smith is the lead and she's the one that's being referred over. I know psychologically she's probably going to connect better with Sandra. And Sandra, who is a female, she's in her late 20s, she's super knowledgeable. They're going to connect. They're going to have more in common than Alonzo, who's in his mid to late 30s, Spanish bilingual male, right? Because if she is running this as a female, she is already wearing the pants, and immediately a man speaking to her initially, it's going to be too hard of an approach. So that soft female approach will convert better, right?
Makes total sense.
Exactly. And then I knew if it's a male that comes across and it's an older male, let's say, I could just tell by his date of birth or whatever it is on thing. Alonzo's going to have a much better close rate just because in his day and age, he's not going to trust financial decisions from a girl on the phone that sounds like it could be his granddaughter's age. Mm-hmm. It's just psychological, right? So what I did is I broke down the lead situation where a lead comes directly in and they use a bat phone number. So it's one single phone number that every agent has. And that phone is a copycat phone on Alonzo and Sandra's phone. So when it's like a Google number, it comes in, they can text to it. It's going to go to Alonzo or Sandra's phone. So they're always going to get a live person. And if they're on the lines, it's going to go to Roxy. So I don't want anybody ever hitting voicemail. I don't want if a client's going to call us, they cannot hit voicemail. That is key. So that comes in, they go ahead, and all the ISA's job is to do like a soft 1003. Just the warm and fuzzies. They do not need to guide. If they say, hey, I have a foreclosure 2 years ago, we're still getting their app and dog. I want them in my ecosystem, right? And so their system is they reach out to the client a total of 10 times over 7 days is how they work that lead. And that's a mixture of adding them on social media, calling them, texting them, and that's their job. Their entire job is to get application and get docs in. That is how they're paid. And then every time they touch that, an immediate text message or an immediate email is being sent directly to that agent, directly through Salesforce. We use a Django skin on it. So they literally, you don't have a business unless you have a CRM that is implemented in every single aspect of your business. Like at any point in any time, I can go into my dashboard and I can see, and I know exactly how many follow-ups they have to do that day. I can see every point of contact they've ever had with that client. I can see every text message push notification that was done to that agent, because every note that they put in, hey, I spoke to so-and-so, click a button, that is formatted into a text message and email and automatically goes out to the agent nice and formatted. And you know what that eliminates? Agents calling me, right? I don't have
Yeah.
agents ever calling me, hey, have you called so-and-so yet? No, because they know they get those updates. And
Yeah, so you got three, not to cut you off, but you have three ISAs on the front end,
yeah,
and that's full-time job of literally just taking really softer type information, right?
Yep.
And then just finding out everything about the client and getting them into your ecosystem in every type of format, text, social media, whatever it might be. So that's pretty impressive. I mean, you haven't even begun anything yet, and you have three full-time people just getting info.
Oh, and they make good money. I mean, they make good money. Like, and that's where the thing is, people try to steal. My ISAs have been with me. Sandra's been with me for 5 years. Alonzo's been with me for 4 years. Mind you, they are making like real making, not dialer making, but real making between 100 and 200 calls a day, you know, on consistently doing that. And then if they don't reach that person after 10 tries within 7 days, it gets funneled out to an agent legend system and different campaigns I've built that nurture them based on that part. So it's dropping content pieces. And then I'm really big on content on my social media. So I'm staying in front of them top of mind. And it's not mortgage stuff. It's literally, it's like, hey, it's a video like, hey guys, and my update on, hey guys, did you try out Javier's restaurant? It's unbelievable pomegranate margaritas. If you guys haven't tried it, check it out. And that's getting pushed out. So it's because people don't care about mortgage stuff. You know what I mean? And then that way, then they respond to it. And they respond to it in Agent Legend, brings it back in life. Then Sandra and Alonzo go right back in attacking it to get those docs in. And once they get application and docs in and they go through and they make sure everything that we need to start the pre-approval is, they push it over to my junior underwriters. And they don't ever deal with that borrower again. Never again.
All right, so you haven't talked to anybody yet in the process, right?
No, none of my loan officers have. Yeah.
All right, cool. So it comes in, speaks to one of your ISAs. They're hitting it until they get a more of a quality lead, right?
Yep.
Then it goes to a junior underwriter at that point?
Yeah. So exactly. So then I have a junior underwriter, Kevin. And so what he basically does is he goes in, takes all those docs. So this is for a pre-approval is what I'm focusing on here. Refis are a little different, but still. But pre-approval, so it tags it in. So as soon as Sandra and Alonzo get that, they check a box directly in Flowify, which is also linked with Jungo. It shoots Kevin an email and says, hey, all the docs are in, everything's uploaded, go in and build the file. And it gives him any of the notes that's in there. Kevin goes in, does all the income calcs, runs DU or runs LP. And then once he's built it, he immediately goes in, moves the Flowify milestone, and then which populates an email we attach to it. So then the loan officer then gets directly to them a lead that's already been talked to with a file that's already been dialed in. So then the loan officer just goes into that file, looks it up, sees if they can like push the DTI up a little bit, just double checks his basic income calcs, then calls the client, goes over all the details with them, speaks to them, goes over the whole thing, sells them on what they can get qualified for, does that whole thing, then goes ahead and formats an email that they shoot to the client where we use a system called Vidyard. It's kind of similar can be used to BombBomb, but what Vidyard does is it's a mixture of it's like what Mortgage Coach looks like, where it's a screen capture or it's a video. So then they'll make a quick video to the client that says, hey, you know what? It was a pleasure speaking with you. Or if they got a voicemail, hey, I just wanted to let you know I tried giving you a call. We've got you approved for a 30-year fixed VA loan, blah, blah, blah. And they go into and they explain everything that they went over with the wife or the husband and then send that out to the client in an email. And the great thing about Vidyard is as soon as that client opens that video to watch that video, it notifies them via text or that, so they know they're engaging in a digital space. And this way it avoids the game of telephone, right? Like if I'm your wife and you're my husband and the loan officer talks to you, good luck trying to explain to me what you just learned for the first time, right? And that's where my pre-approval, our pre-approval conversion to into escrow is almost 80%. So if we get a letter out and they're approved, we're closing that loan 80% of the times. And usually about 10% of those that we lose, it's to new construction where you just can't compete against.
Can't do it anyway
because it's a $10,000 credit. So my capture rate is through the roof from that point because they get into my ecosystem. So they see nothing but modern lending or that loan officer everywhere. And then once we do that pre-approval, we take a package and I run different swag items every month. So I have a client concierge that as soon as that pre-approval goes out, we update our Salesforce system and that sends a report to my client concierge that she prints out every week. And she has one of her high school daughters that goes ahead and hand puts like, so it'll be like one of our cool hats and a shaker bottle and a copy of their pre-approval letter, you know, in a box that's all branded Modern Lending, and then mails that out to them. So then the client's getting in the mail 4 or 5 days after they get pre-approved, a Modern Lending box. They open it up. It's one of our swag items, and it's stuff that's cool. It's not like, I mean, you wear it and people, and then you have your billboard for $12 walking around their entire community and doing it. And then your billboard in their home. So when they're ready to buy a house, even if they stop working with that agent, they're wearing your hat. They're drinking out of your whatever cup you gave them. They're using your cutting board, like stuff that's cool. And it's worth every penny of it.
Yeah.
You know?
Shit, I'm buying a house in Southern California like tomorrow now. I just want to get up in this ecosystem. All right, cool. So, and as we're talking about this, you haven't talked to anybody yet.
So
I'm trying to figure out.
So at this point, like I have, so of the pre-approvals, right? So I would do about, up until last year, probably middle of last year, I was doing about 75% of the conversations with the pre. I was one making the calls, doing that video. And then I trained and found, 3 guys that basically run my book. Because when I moved from Loan Depot to Modern Lending, I was like, okay, I'll work with a hand select clients. I'll work with a hand select clients that I have to work with, my specialty clients, but the rest of it is going to go to these 3 guys. So that's like like this year, I'm not writing a bunch of loans because I'm giving it to these guys so I can perfect this system, because, and that's what it is people want that in and out experience where it's the same quality over and over and over and over again. Yep. And so these guys, I have them trained, but whether it's Joe or Sean or Taylor, kind of the 3 guys that do that, and they run that, but the forward facingness of it is uniformly me, like in the sense of like, when a pre-approval application comes in, it's immediately triggering an email or a video email that goes to the client and goes to the real estate agent that it's, pressing up video, and it's one for each lead journey, whether it's FHAV or conventional. Says, hey, thanks so much. I appreciate you sending your application and docs into Modern Lending. We're going to be going ahead and getting it all reviewed, built out. One of the things that we do is we actually have a junior underwriter that does all your income calculations. So it's pretty much like a guaranteed to close approval. That's why we take the time to do this. So within 24 hours, Sean's going to be reaching out to you and walking you through everything. Thanks so much. Have a good day. Right. And it's within 7 seconds of getting the app in.
Yeah. And this is how you build a business. Like, listen, man, what are you, 37?
Yeah.
You're 37. I'm 37. I got 3 kids. I think you have 2 kids.
Yeah.
Like you did everything you're training everyone else to do right now. Yeah. Right. You're at that age, man. You ran hard. Now it's time to spread the love a little bit and deal with your specialty clients, because you can't do it all, especially with the volume you're doing, right? So you've built this out and you've done this already. Now you're just kind of spreading it out, right? This is how you grow a business.
And that's how and there's no greater feeling than watching dudes. Like one of the guys that works for me, Sean, like a year and a half ago, I brought him over from New American Funding, and he was basically like, he was a loan officer, but he was new in the business, but he was smart, right? I always say you can't teach people 2 things. You can't teach math IQ, and you can't teach hard work. If you have those 2 things, you got a math IQ and you like to work hard, like I'll turn you into a $100 million producer. I mean, I can do that. That's easy for me. And so he gave me those times, and now there's no greater feeling. I mean, I'm watching that guy that was making 90 grand a year, making 50 grand a month. Now, I don't get to make as much money, but dude, there's no greater feeling than that. But you have 4 of those guys or 8 of those guys or 12 of those guys that you're only making 20% of what you would have made if you would have done that loan, but you've got 20% times 9 guys, that's 180% of what you would have made.
Yeah.
And then you're watching these dudes, you're changing their families. You're watching like their wives get to stay home and work from their kids. Like there's a sense of accomplishment that you get and rewarding. You can't put a dollar amount on.
No. What do you guys, are you still looking to recruit right now? We touched on this briefly yesterday. Like you're a high quality loan. Like maybe you take someone off the street and you put them as an ISA or another part. But in terms of loan officers and recruiting, like you want people already doing about 10 to 15 units. Am I right?
Yeah.
Like
so
you're more the higher quality and someone that fits your system right off the bat.
Yeah. And I mean, my big thing is we don't advertise that we're hiring. I find you. Right? Yeah. That's kind of always been my thing. Just being, one of the top 10 originators in the country for over a decade, I kind of know a lot of people. And so what I'll do is I get a lot of people reaching out. My big thing is I don't want anybody with bad habits. That's my big thing is I don't like to. So we're launching a new division that goes live next month. So I'm having like a separate refinance kind of call center, which what I'm doing is basically going to take guys directly from direct call centers, whether it's, that they're out there. Like my cousin's one of the top loan officers at Quicken. And so he and a couple other people that were spent some time at different places, they're coming over. And then my goal is to get them to just work my refinance book plus direct mailers, do all that, learn that system. And then the top performers, then they get to work my book, and they get to work Modern Lending's book. So they go because once you learn that system, like Taylor came to me 4 years ago, he's doing 20 million. He's going to close 100 million this year. And that's his own business. That's not my
That's
book.
awesome.
That's all his own business. I've just taught him how to get out there and actually do it, because people make the mistake. They go ahead and they spend all this money and all this time driving traffic in, and they haven't even built the road. So all that traffic comes in and they're like, what, where's the road at? Where I was opposite. I spent tons of money building that road. And then I went out and got the business in the door, because then people from there like, dude, this is a process, man. And then it spread. And so it's kind of reverse engineering, because you're taught to sell.
Yeah.
How to close it. That's like, and it's not, it's learn how to close it in that process that comes in. So then you can just sit there and scale it, right? Like, and that's where people mess up, because you get one first impression and people screw that up all the time.
Yeah. I mean, let's be honest. It's not that hard to get leads anymore, right? Right. Yeah. 10 years ago, that's what it was. You got to find leads. You got to find them. Now you have an influx of leads, but people are watching you, man. Like, you only get the one shot, and quality is so important. And that's how you scale, right? If you have the road paved already, then you can go bring them in. It's going to be perfect quality. That's how you jump so quick. Am I right?
Exactly. Absolutely.
The road.
Oh, absolutely. And my big thing is I have people come in and they kind of like, I've had a couple guys come over from different retail lenders, within the last 6 months. And they're like, God, this is too much. Like, why do you have to do that system and this system? And why do you do that? And why is it this update? And how come you're updating the client 13 points during the time it's on? And then like month 4 comes in and they're like, right, holy crap, I just closed 31 loans this month. I never closed more than 13. Like, how is that? And I'm like, dude, it's a system. Like, once the system it's in there and it runs, like, there's a reason for this. Like, I created this system by learning and masterminding with guys that are closing. Like, we still to this day, even guys on the retail side, like I talked to my buddy Sean a week ago, and we were still sharing tips because, I created something like I've taken a lot of his approach on some of his comp structures and a lot of the things that, he's done in the flow of what they call a production manager, the way that I've learned some things from him, and we've shared some stuff vice versa. And that's the great thing is as a good mastermind group, like in those, you only need one idea a year as the average person, like, to hit a home run. Like, you have one really good idea a year that hits, like, you're going to do really well. The great thing about a mastermind group is like every one of those guys is going to have one great idea a year. Yeah. And now all of a sudden I get 15 awesome ideas given to me a year. And then I just choose one every 100 days to implement. And now I'm 4 times as more effective than if I was on my own. But the only way you do that is collaborating and sharing with complete disregard of competition, right? Like, like, which is awesome. I think even Anthony Costa, he's huge for that. It's like, share, we'll upload stuff, give stuff.
There's obviously enough business out there. Yeah. You just listed off 3 or 4 people that are doing like 2 billion or whatever. Like, you add it all up, like there's enough out there, right?
Yeah, exactly.
Yeah, especially California, man. I've talked to a lot of guys out there. There's a lot of volume being pushed in Cali, and that's one state.
Yeah,
exactly. There's plenty out there. So that's a good mindset. Now we talked about the road, right? And it being paved and it's there. Now, what are you and the loan officers doing then to bring in business? Obviously you're putting out a ton of content. I see you on social media constantly on Instagram and Facebook. What are some other ways? Because this is how you scale. Now you go get more leads. You got the road. What are some things you're doing there?
Yeah, exactly. So one of my big things. So I was a refi guy. All I did was refinances. Like, it was a joke. Like, I think in Scott's been guiding like 2012. I was 99% refi when I did my first 200 million. And I had a mentor of mine who was one of the top loan officers at Countrywide. This was back in like the fast and easy days. And he was closing 100 loans a month. He warned me. This was like when QE2 happened. So it was like 2013. And he's like, Brian, you better switch over to purchase. And I was like, okay, how do I do purchase? And so I thought about it and I realized, okay, at the end of the day, what a real estate agent cares about more than anything else is you make their transaction as easy as possible for them. You do as many things as you can for them, and you help them drive in more money, right? Like you have to help them close it easier and then make them more money, because you don't want to teach them how to fish. You just want to give them fish. Like that's like, and they'll never go anywhere try to look to fish anybody else. So what I realized is I am going to really spend a lot of time going into real estate offices and not talking about mortgage programs, but teaching them really how to grow their business in a legitimate way, and teach them, hey, for an example, here's how you work on Instagram. Like, here's what you do. Here's the content. Here's what you guys need to put out. I'll create your videos. Here's what you do on this. Hey guys, all you guys have to do is when you get a lead in, send it over to my ISAs. They're going to call it, convert it, and then dump it back to you with the pre-approved client. Because let's just call a spade a spade. Realtors don't call leads. They hate it. They don't call them. You don't, and it's the biggest problem with team leads. So I realized that was a big missing link with all these teams when teams were starting. And I was like, okay, I know these team leads are spending a bunch of money on leads. I got absolute savages on my team that call leads and convert. And both of them had experience as real estate agents before. So a question a consumer has, they just have a question about buying a home. They don't know if it's supposed to go to a real estate agent or a loan officer. So I'm like, so I started controlling their lead flow. So I started getting them and giving me all these leads. And then I started converting these leads at the same time, really spending the time going to each one of their meetings and just dropping fire. Like every meeting I was in there and like, hey guys, here's how you do this. Here's the way this needs to get done. Here's how this is. Hey guys. And so what ended up kind of getting like a cult following of these agents that were just like, hey, if you guys need a deal to learn how to get done, just send it over to Brian Decker. They'll make that happen. And so we got that, not the trash, but just taught them how to pre-screen their clients. Because what happens is we all know we get bogged down as real estate agents in general. They're just so excited to talk to a lead. They take zero time to pre-qualify that lead. They waste their time. They spend an hour with them. They show them homes. It comes over to us and we're like,
done.
Like, done. It doesn't work, right? So I took that away from them. I kind of got the clients interested and were able to kind of screen them. And then we handed that warm handoff to the real estate agent. And so we did that. And then what we really did is I went super heavy on the fact of giving real tangible items. So I would pay for all of our clients' appraisals that we did. I ran thinner margins that I could do. And I swagged the crap out of my entire community. And, I spend still to this day, I spend $15,000 a year getting these amazing blankets made, like 500 of them. And then we go and we give them to like every single Little League and Friday Night Lights football. So what is it? They go to the field and you see like 17 billboards, that people are laying on. And so it started to create that, and people want to work with who they think's cool. So if you kind of make yourself and the branding and what you put out there, and then I started doing events, and our events were just fire, like flying in a band from Nashville. Like we would do, because realtors like to drink and they like to have a good time. So I started throwing massive quarterly events, fighting 200 or 300 agents, and they were fun. Like it wasn't talking about business. It was everybody drinking, socializing, going, and like I threw like a country fest, which would be like, I got like 7 or 8 bands and got my sponsors to kind of donate. And we got like 1,200 people that come and listen to bands and drink and have a great time. And so I just really focused on, building that friend, because people want to work with who they like. Right. And so I just went out there and just really threw events. So between events, education, and being in their face constantly with content that they could share, because real estate agents, they're not good at conceptualizing, creating content to their bases. So I just did white label content and they would just share it and share it and share it. And then little by little, you build a massive audience on social media, and I think I started doing that back in like 2012, really kind of focusing on branding and Facebook. And, now it's kind of nice because once you build up that audience, if I'm like, yo, anybody, you guys want a loan out in Philly, you better see my boy JP up. You know what's going to happen? The 100,000 people on Facebook and 17,000 people on Instagram, they're going to hit my boy JP up, right? Like, because I've delivered them quality, believable content. It's that kind of like the influencer style marketing, but you have to give good content.
Yeah, it's almost too easy, man. Like you said, like I do a ton in our local community as well with our logo, just giving stuff out. They can't go anywhere else. No. They're not going to. They're almost going to feel bad if they go anywhere else.
Yeah.
You've given them so much. I mean, I'm not saying it's like a mob mentality, right? Well, I'll give you some stuff, you better come back.
Yeah.
But it kind of is, right? Yeah. No doubt. Can you touch a little bit more on the social media type side? I know that's something we want to get to because I see you everywhere. What are you using? Like, where are you going? Instagram, Facebook. I know you hired a videographer, right? You spent some money there. What are you doing there?
Yeah. So I thought I was doing social right until I got a mentor and actually realized I was doing it completely wrong. So the biggest thing that I have learned, and I'll be honest, like I did well on social before on Facebook, but Instagram, I'm 37. Instagram is like, it's not me. Like I was a MySpace dude, you know what I mean? That was my generation, And so what I realized was, I was like, okay, there's a formula to this on what people want to see. And so I started creating a bunch of videos on Facebook probably 4 or 5 years ago. And they were simple whiteboard videos where I was able to kind of explain a complex concept very simply. And that's what you have to do. Like I would take this and I would teach it to somebody that had nothing to do with mortgage. If they still didn't get it, then I knew it probably wasn't something I wanted to believe. And then, so that's what I did for a long time and just put up stuff. And then I started getting mentored and they were like, dude, no, you're wrong. What you have to do, take a passion and take a niche. Take your passion and your niche. And what you got to do is everything needs to be uniform and clean. And so this was truly up to probably the middle of last year. I wasn't really following a formula. I was just kind of mixing in personal, mixing in that, that, all these things. And so I really honed in on it. And so the key is there's a very specific formula, especially on Instagram, that you need to utilize. And the biggest test that I tell people is if you go on your Instagram and you go to your profile and it shows at the top of your profile and then it shows all your pictures. If all those pictures don't look and match the exact same colors, exact same filters, and look like they belong together, if they don't look like they absolutely, like we all know, like when we see on TV and we see a Lexus ad, we know exactly what that looks like in our mind. It's the car driving dark at night, sliding around, like the guy's voice, like we know that. And we know and we know Jack in a Box. We know what Jack in a Box. We all know it's consistency in brand, so it's recognizable. People will follow consistency. They won't follow you if you're inconsistent. And so what I realized was I made a commitment that I was going to do something that I love. And my personal passion is I got taken in a Ponzi scheme and lost everything when I was like 27. Like I didn't grow. I kind of had to cut my teeth on everything. And so what I realized was I'm super passionate about teaching people and really educating them on everything from finance to being self-motivated to truly bettering their business, as well as, teaching them about investing, whether it's stock market, real estate market, buying Rolex watches, whatever it is. And then I picked the consistency of colors. And people, we think about how we learned as a child. How were we taught as a child? Infographically, right? When the first books we looked at when we were learning to read, what was it? Giant bird and then BIRD underneath it. That's the way your brain works. So on social media, you have to choose that infographic, simple style to teach people things, right? Nobody's going to read a paragraph like this, but if you can explain that paragraph in 6 pictures with 4 different words under each picture, people start to recognize that and understand that. And so I made that switch. And so what I live by and approach is I put out 1 piece of video content every single day, and I put out 1 infographic content every single day. So like today, for an example, if you want to check it out, you can just go to @TheBrianDecker on Instagram and copy what I do. I mean, I don't care. It's called my $1 million morning. I made it up, right? So it's what I do. It's picture of 6 different things on my roadmap of what I do in my morning, right? Super simple, right? Get up at 4:45. It's an alarm clock. It's, it's just that. you know, whatever it is, Rolex watches, like I'm a big believer in buying tangible assets. So it's a picture of the 6 best Rolex watches that are likely to appreciate with the pictures of them and their names. So with little things specifically like that, that I really focus in on. And I mix that in with content that I get from asking people, right? You ask a question, like if I was like, JP, what are you most curious about right now with my business? You'll be like, dude, can I see what your, whatever your jungle looks like?
Yeah.
Or can I see what this is, right? Okay, cool. So I just ask people what they are curious about, and then I learn that content and I teach it. Simple. Yeah. You know what I mean? And you're consistent, because people, it's like, why are sitcoms the same time, the same day, and the same length of time? Because people tune in, they want that consistency. So you've got to deliver your content that way. 1, because the Instagram algorithm reads it that way. And 2, people want to consume that. And so I literally just started implementing that full change on Instagram beginning of the year. And nothing, like I said, I just had to learn it from scratch. I was maybe 1,000 followers, you know, in January. And I think just yesterday, today, crossing like 17,000, all in my market too. So I'm getting 5, 6, 7 emails a day, DMs a day about refinancing or buying a home. So a really good, inexpensive way to go to consumer direct.
Yeah. Well, I've seen it on Instagram. You're standing in the same spot when you do your videos, right?
Yeah.
You're the same height. It's not like it's here, it's there. Yeah. Like you're here. Yep. And then I think you do have words underneath, right?
And I do, yeah. And I subtitle everything. So subtitle is a great thing. If you don't use subtitle, download it. And then you banner bar everything. Same colors, same consistency, same font, same everything. Because people don't realize 70% of videos are watched without sound, right? Because they're at the gym, they're looking at it,
makes sense.
On their phone. So you've got to subtitle everything. But to get them to subtitle, so the best strategy I tell people is there's a very, very important format. Go to YouTube, go on YouTube and look at the most watched videos. Watch their thumbnail. Their thumbnails are always like, right? Like and outlined in them in blue with the background in a word. It's clickbait, right? So as crazy as that sounds, that's what you have to run and be able to do. And so it's consistency. So it's, you know, and it's putting yourself out there. Like, you know, I did a video like a month and a half ago or 2 months ago before coronavirus came out and was like, coronavirus is going to FR, you know what up bad. Yep. And everyone's like, you don't know what you're talking about. Like, you have to put yourself out there. You got to be a little bit controversial. If you're just always like talking about vanilla ice cream, nobody's going to care.
Nobody cares. Yeah. No doubt. All right. Well, we went 45 minutes already, man. Yeah. So I want to we could talk about this all day, right? And I hope at some point I can pick your brain about some of this stuff, man, because I'm looking to grow and I'll do that, man. But let's take about 5-10 minutes, right? I always try to ask these questions at the end.
Yeah.
Get you thinking a bit. So number one, with everything going on right now, right? Where do you see the industry going? Let's say in the next 2 years, 3 years, where do you see the industry going at this point? Even with everything going on, this is going to change everything. But in your head, where do you see things going?
I mean, I'll kind of give you the good and the bad. So the bad stuff, I think that's going to happen right now. I think we're going to see major margin compressions. I think, and that's going to stay for a while. The days of running 225 and 275 comp is gone. You're going to be running $1.50 to $1.75 comp max on conventional stuff, and probably pretty close to that on government stuff if you want to stay in the fair lanes. You've got to really compress your efficiencies. It's like everybody else. When things are good, people aren't paying attention to where the money's going. So one of the things I tell everybody is print out 3 months of your business bank statements, 3 months of your business credit card statements, go through it, put everything into 4 categories, right? Like the necessities, the I'd like to haves, the I need to get rid of this, and the WTF this, right? And clean that out, because you're going to have to squeeze down, because let's be realistic. In any other industry, you do not have the salesperson making 50 to 60% of the profits on selling a product. And that's what we have in the mortgage industry. We have loan officers that you're having to pay your loan officer. If you make 175, you have to pay your loan officer 100, 110 bips. That's not a model. Like car salesmen, if they make 10 grand, they're not writing the check for 6 grand to their salesman. No. So I think originators, we all need to wake up. Yeah, the days of making 2 points on a deal, you may get that on your specialty project, but if you want to scale, you got to let that go. I think we're going to see, yield spreads and lender credits pretty much evaporate.
Yep.
You're kind of going to get back into where I was in the industry in 2003 or 2004. You priced everything at par and you charged a point on the front or a point and a half
Yep.
on the front, and you made one on the back and charged one on the front. It's going to go to that aspect of it. And I think there's some real benefit to the clients. I think you're going to see that ability now where you can spend 1.5 points and buy down the rate by 0.5% because it benefits the servicers to keep that, to prevent the EPOs. They're servicing. We've got to get servicing portfolios to be worth something. And then we're going to get them to worth something if people don't refinance their loans every 6 to 12 months. So I think that we're going to see that change pretty dramatically there. I think that we're also going to see, we are going to see the box brought in even when COVID's out. You know, the days of 560 FICO score, you know, going, you know, with certain things on a manual, you know, on a, not a manual, but on, you know, an AUS approval. I think BU is going to get stricter. I think it's going to really be based. I think they're going to change it, do things based on longevity on the job and reserves. And, you know, the revolving ratios, the utilization on credit cards, I think is going to start playing a big part in that. So I think we got to pretend that we're going to have to, you know, if we're going to hit balls, we kind of got to hit them between, you know, like left center and right center. We can't drive them down the line, can't drive them down the lines anymore. And then, you know, lastly, you know, one of the things I was going to say is the good side of stuff is buckle up, man. We're going to be in for a $5 or $6 trillion refinance boom over the next 2 years. And specifically on top of that, prices, they're going to soften, but rates aren't going anywhere.
Nope.
If rates don't go anywhere, and it is a more expensive opportunity, more expensive for a client to rent that home than to put, or the same price, than to put 3% or 5% down to buy that home, it's going to be a beautiful, beautiful, beautiful thing. And I think that people that, you know, the 70 or 80% of people that are going to be kind of unaffected by this with their jobs, they're going to be coming out to buy. I think that we're going to see prices pretty strong. And I'm really bullish till 2024, 2025 on this stuff. And I think it's going to weed a lot of people out of the industry that don't belong, you know, like, you know,
we've been waiting for that, right? We've been saying it for 10 years. Like, when are we going to weed out some of these people that aren't true advisors and don't have true systems? That's what we need. We need high quality lending, in my opinion. And I think you nailed that.
Oh, 100%. Like, and people, since when, if you think about it this way, when we go to a car dealership, okay, and you go and, like, let's say for an example, if I'm going to go buy a Mercedes and I go to a Mercedes dealership and I go to that Mercedes dealership, you know what? And I go and I sit down with them, and that guy knows so much about cars. That dude at a Mercedes-Benz dealership knows more about cars than 90% of the loan officers that are in the industry know about the mortgage that they're selling. And that's a problem. And the mortgage is 3 times, 4 times more expensive. And you have people that are not properly educating clients. And so I think that if we see a shift, and I see we're going to see people, I think Barry Habib says it best, you know, we need to be like debt managers, you know, or finance managers. That's what we actually need to do, because rather than, we're not selling a $100 ticket item. Like, I taught all my guys, you educate that person and you teach them about what they're buying, and they will come to you. Because you think about it, as a student, we will always go to our teacher when we have a question related to that. So it is ingrained into us. We go to our parents when we have something that we have a question about that our parents taught us, or our wives is something that they taught us. We go to the source that taught us that. And so if we change that mindset, and rather than just looking at closing that deal, and we actually take them to teach them, they're going to come back to us for the refinance. They're going to come back to us for the purchase. They're going to refer their friends and family because they trust us. And that's where that change needs to take place.
Yeah, no doubt. I mean, the next question I was going to ask is, what would you tell a loan officer right now? But I think you kind of nailed that.
Yeah.
But if you want to jump into that, like someone in today's world, if they want this to be a career, right? What's 1 or 2 things you can tell them that they got to do? I mean, you nailed that, being an advisor, but what else can you tell them?
Yeah, you got to educate, man. Like, and here's some things that I do. So here's what my day looks like, right? I get up in the morning, get up at 4:45 in the morning. And when I get up, I go and I drive to personal training, right? On that 20-minute drive to my personal training where I'm going to go work out, I'm listening to a podcast that's specific on real estate, whether it's Bigger Pockets podcast or the Investors podcast for real estate. I'm listening to something very, very specific real estate related. And then on my drive back home, or back to the office after I shower and get ready at the gym, I'm listening to something financially specific. And I alternate podcasts. whether, it's the Money Factor podcast, or if it's something that Barry Habib's doing on Mortgage Market Guide, or if it's CNBC podcast. I'm using something to constantly grow and teach myself stuff, because if you are in the mindset that you constantly have to create content all the time, you've got to constantly be teaching yourself and learning things so you can teach it. And that's where I tell people, and it's like, I tell people all the time, like, people assume that I'm really smart a lot of times. And I'm not really smart about a lot of stuff. I'm just really smart about finance and mortgage, because that's where I focus all my energy learning about. Right. And so I'm on the phone with a client and, hey guys, isn't it crazy? I can't believe that oil bounced to whatever, $13 a barrel today. What's pretty sweet is, if you are going to look at a long position, we know oil is going to rebound in 24 months, what do you like? People just are like, oh shit, this guy knows a lot about finance. He just doesn't. So you got to have that breadth of knowledge. So if you're going to be serious about this game, you better be the Mercedes car Benz, salesman. You better translate that and be that legit at your job, or my guys are going to take your business,
Yeah, no, I got it, man. I think you nailed it right at the end, man. You pulled it full circle. Yeah. You're going to keep killing the game. And if you can't catch up, we're going to take it, right?
Yeah.
I mean, it's as blunt as you can be, man. I love it.
Yeah.
Well, thanks, dude. It was a pleasure talking to you, man. Good seeing you again. Anything you need, I'm here, and I might pick your brain at some point.
Absolutely. I appreciate it, JP. Take care, guys.
Cool. Thank you. There he is, man. Brian Decker, Modern Lending. Thanks, bro.
Of course, dude.